It is visible, audible, na?
Yes, it's both visible and audible. You can start now.
Just I wanted to know, just
Yes.
1 minute. So 73 attendance. Okay, just so I am visible, audible, everything is okay.
Yes, everything
So,
is fine.
so I will start.
Yes,
Okay.
sir. Okay.
So good afternoon to everybody. Uh, Today we are going to discuss on the topic that is sorry, I linked another file. This is not the file. Just I am disconnecting. Just 1 minute. A wrong file has been included. Tell me, now it is visible. Madam, hello, madam.
Yes, sir, it's visible.
Actually, I have wrongly put another file.
That's okay,
So
sir. It's visible.
once again, good afternoon to all of you. Today we are going to discuss the filing of income tax return, the related provisions, key aspects, and the procedure under Income Tax Act. Though it was first I made up mind to discuss on PAN, but PAN will be discussed, the requirement of PAN and other related as per syllabus. We will discuss in the appropriate stage of the presentation. Friends, before going forward for the detailed discussion of the topic, since we are discussing the topic of return filing of income tax and it is a compliance, but before that a short view I will take off on the subject and related matter. Unless you are very much aware about the provisions which are related to the filing of the return, then you cannot file the return perfectly and correctly. So I will take some time today related to the topic. I will take some time to discuss and then subsequently switch over to the whatever subject in your discussion. Friends, you know that Income Tax Act, what is the constitutional provision? So constitutional provision provides the power to levy the taxes, and you know that the power has to be exercised as per Article 246, Schedule 7, and there is a three lists are there related to the tax. One is known as list 1, which is the union list, on which only the government of India or the union will put the tax or levy the tax and collect the tax. And the second list is related to the state list. So state has the power to levy the tax. Entry 46 has given the power. And list 3 is the concurrent list under which both the state and center can levy the taxes. Friends, just before going forward to the list 1, and after the GST regime has come from 2017, few of the taxes of the union list now covered under GST. So it is a dual GST. So since we are discussing only related to the income tax, just I can tell you that at present the union list covers income tax, and that is the tax which is levied on the income, and including the agricultural income, and particularly the state list covers the related to the taxes which are not covered in the union list, and mostly the state excise, municipal taxes, like small taxes, because of the GST which become dual tax. Both the central and state government has the power to levy, and the 26 items of cess, central excise, service tax, VAT, mostly the it was included. So now it is CGST, OGST in case of intrastate, and IGST in case of interstate. So that means since we are going to discuss our topic, it is covered under the union list, that is income tax. This income tax mostly collected in two category of names. One is the corporate tax, which is collected from the corporates, and other one is income tax. and this income tax is other than the corporates, and both taxes which are collected by the central government, and there is also sharing to the state governments, and it depends upon the formula of calculation. And for your understanding that the formula which is provided at present, to my understanding, around 35 to 36, 35% around is distributed to the states, and the balance is utilized by the center for the purpose of development. Friends, the concurrent list is the list where the both the central government, state government has the power, such as your stamp duty, electricity duty. So these are the cases where both state and center put the tax. And usually many cases we have seen that even if central is the power also, but they do not put the tax, but both have the power. And this is when we are talking about income tax, already I told return of income is one of the part of the compliance. The income tax, it is ministry, it is covered under Ministry of Finance, Department of Revenue, and two boards has been constituted, CBIC and CBDT, Central Board of Direct Taxes, which is looking after the levy and collection of income tax. Its power is to not only levy and collect, but also time to time find out actually there is a research department also, and in addition to the CBIC, they can also come out with different circulars, clarification, changes proposed in the act. And before going for, and in that case, when we are talking about income tax, and it was the prior to 1961 Income Tax Act, that is 1922 Income Tax Act, and which was followed. And the Income Tax Act is supported by the income tax rules. Income Tax Act contains the provisions. Rules contains the supplement to the provisions to make it more workable. The income tax rules has been formulated. When we are talking about filing of the return, for your kind information, that the income tax rules prescribe the forms, and that forms which has been notified generally by the central government or by the CBDT every year. And we have seen in last few years, number of changes has been taken place in the income tax return forms. So when we are talking about Income Tax Act, income tax rules, 1962 rules, then it has been amended by way of Finance Act. You might have seen every year the budget proposal has been made, and the Honorable Finance Minister presented the budget, and one of the part is the amendments or proposed changes or new provisions in the Finance Act. Government issued the circulars. Circular is nothing but a clarification. You might have seen when the return filing we are talking, it is also supported with a number of circulars which is clarified regarding the filing of the return of income. Notification is made by way of applicability of the provisions, changes, etc., by way of notification. And again, judicially pronouncements also plays very important role. Friends, so when we are talking, we can say that government is the tax receiver, collector, we can say. So we are the assessee, or we are the person who is paying the tax, commonly known as the taxpayer. And under the Income Tax Act, the taxpayer has been divided into the categorized under different categories. One is the persons are the individual, Hindu undivided family, cooperative society, trust, partnership firm, LLP, limited liability partnership firm, companies, association of persons, body of individuals, local authorities. So these are the category of taxpayers, and the category has been made categorically because the provision of levy and collection also provides for certain exemptions, deductions. So some cases exemption deductions are there. It is not time to discuss all the exemption deductions because we are only concentrating the filing of return of income and related issues, including procedural aspects, including the income tax portal contents, and the procedure how to file. So today only we will discuss the provisions related to the return of income. Next class we will discuss the practical issues regarding the filing and the procedure of filing. Friends, for your kind information, we are dealing with the Income Tax Act under which return filing has been provided. Income Tax Act consists of 23 chapters, 298 sections and 14 schedules. Again, it is divided into number of sections, subsections, and to make the compactable. So this is the overview just I have given, and for your kind information, the judicial decisions I placed in the last. So whenever there is a dispute between the tax collector, that means government, and taxpayer means we, the category of a persons. So generally there is a appellated forum. So in that appellated forum, the decision may be in the favor of the person. Person is known as assessee also, and in the favor of the assessee or the in favor of a department. So it went from Commission of Appeal, first appellated authority, second is the your income tax appellated tribunal, third is the High Court, fourth is the Supreme Court. Supreme Court decision is binding to all, and any decision has been given by the higher court has to be bound by the lower court, including the department. So these are the overview we have taken. When we are talking about filing of the return, and practically one class covers how to file a return of income related to ITR 1. ITR 1 is applicable to individual HUF and it is related to limited incomes. But ITR 1 to ITR 7 and all the ITR will after some time we will discuss. Will cover these are the heads of income. Actually, whatever income we are going to report in the income tax return format that has been categorized as salary, income from house property, profits and gains from business profession, capital gain, income from other sources. You can note it that whatever amount has been received by the taxable person or the assessee, whatever the meaning is the same, they are there is a computation has been provided. Computation, in other words, we can see the calculation of taxable income provided in the each chapter. So salary, there is a certain provisions are there, income from house property, profits and gains from business profession, capital gain and other sources, which will be reported in the income tax return format. Actually, as a person, as a taxable person, as an assessee, it is my responsibility to assess the income. When I am talking about income, I am not talking about gross income, I am talking about taxable income. So gross income means the amount which is received, and out of that certain amount of exemption is provided, and in certain cases deduction is provided. So a little bit I will tell, because if you go to the ITR form, that time we can also discuss. And when deduction exemptions are there, after that what remains, that is my taxable income. So every person they are required to report its income in the return of income format, which is available in the income tax portal. So e-filing portal or income tax india.gov.in or income tax India e-filing .gov.in or e-portal we can say. So that has to be taken. And the computation, I'm not because the what I understand the audience is related to the intermediate. But friends, I wanted to discuss this thing because these are the background based upon which we are going to have a conversant or have some knowledge regarding the return of filing of income. And practically when we go for filing in the e-portal, e-compliances or e-portal, that much knowledge is required. So first, when we are going to discuss about the provisions related to return of income as a taxpayer, there is a chapter status of the taxpayer. Status meaning is either you are a resident or you are a non-resident, or you are a resident but not ordinary resident. But a simple way, you can remember that if you are a resident, the income which is received or accrued or arise in India is taxable in my hand. Any income accrued arising outside India also taxable in my hand. So that means if I am a resident, whatever income I am receiving from the other than India, means foreign, or from India, both are taxable. If I am a non-resident, there is a criteria is there. I'm not going to discuss details. You can also, while ever you are going through this chapter, Google search, you can see also, because time will not permit, or this course contents does not have the details only related to the return filing. But in case of non-resident, the person, whatever income arises in India is taxable in India, but any income is having outside India not taxable in India. So non-resident, if you are a non-resident, your only Indian income is taxable. Your foreign income or outside India income is not taxable. So after that, whatever income I am receiving, that income I am categorizing or classifying whether it is a salary, whether it is a income from house property, whether it is will be computed or calculated under profits and gains from business, whether it is a capital gain or it is a income from other sources. And after categorization, so there is some deduction exemptions are there. Some of the salary income is exempted. Again, I wanted to tell you that at present, you have to required to compute your taxable income, pay tax under old regime or under the new regime. So you know that under the old regime, the computation, the tax rates are slightly higher, but there is also deduction is permissible. Just to see, just come down here below the compute gross total income GTI. Just to see here, there is a deduction of from the GTI. So if you are a covered under the old tax regime, certain deductions are you are eligible under the this head. It is known as chapter 6A actually, and VIA, that is 6A. And but that is known as general deduction. But in addition to that, there is also certain deductions under salary, house property. I have a slide. I will show you profit and gains from business, capital gain, other sources. And there is a clubbing provision is there, and there is a setup carry forward. If you are in the past you have a loss, then that loss can be carried forward and reduce your taxable income this year. And after that, what remains, that is my gross total income. From gross total income, I have to take a deduction from the GTI. These are the overview. You can also study it. If you make a just this one, you see, when I am talking about section 15, the income will be taxable under section 15, but there is a deduction under section 16 and 17. And sorry, section 16 and 17 is a perquisite. Perquisite means in whether it is cash or kind, but it is also treated as taxable salary. House property, there is a computation, section 22, 22 to 26, 27, actually 22 to 26. Simply remember the deduction is provided in the section 23 and 24. Municipality tax and others are there. Similarly, business profession section 28 is there, 30 to 37 amount deduction. I am doing business, I am having selling some product, that is my income. But I am also incurring expenses. I am purchasing the goods, so that will be taken as a deduction. That's why it has been provided which one will be taken deduction 30 to 37. Have some idea only. And capital gain is the when there is a capital asset, immovable or movable capital asset which has been defined, land, building, shares, securities, like this. So you can also go for compute as a capital gain. There is a formula is there. So that is the amount which is received known as a consideration. And from consideration, you can go for taking deduction of certain some sort of cost of acquisition. That means later I'm transferring a land or selling a land. So the amount which I received, that is my consideration. But the amount which at which I purchased it, that is my cost of acquisition. That is at present cost of improvement provision is not there. The difference is taxable at 12.5% at a flat rate, and other provisions are there. So income which are not covered under salary, income from house property, profit and gains from business, profession, capital gain, these are covered under income from other sources. So income from other sources is nothing but a interest income, the income dividend income that you take, gift income, the which is a taxable gift, and like this securities income from securities, and agricultural income. Agricultural means agricultural income is exempted, that is separate computation. But any income, agricultural income you are getting from outside India, that is not exemption, so that will be taxable. So like this provision has been provided for the purpose of computation. So this is the overview while you are going through. So when I'm talking about the new old tax regime, these are the deductions are available. But in the new tax regime, the deduction is restricted. Actually, government have put the option not to withdraw the provisions. It is up to you to decide which category. The computation remains same, but the issue is, sorry, the taxability classification remains same, but there is a difference in the computation in case of old regime, new regime. In case of old regime, 72 or 3 deductions, exemptions, which one allowed as a whole I am talking, it may not be applicable to one assessee, it may be applicable to different sections applicable to different assessee. So in a number, if you calculate around 72 to 70, 72 or 73 items of exemption deduction is available in the old regime, but tax rates are more. But in the new regime, it is not available, but tax rates are less. So you have to decide whether you will go for filing your return in the old regime by taking these deductions, and whatever taxable income remains after the deduction, pay at a slab rate which is higher than the new tax regime, or you decide to compute your tax as per new tax regime. Many of the deduction exemptions are not available except few deduction exemption, and accordingly your taxable income will be taxable at a lower rate. So old regime high rate, new regime lower rate. Old regime more deduction exemptions are available. New regime very few deduction exemptions are available. But both receipt of income remains same. Then your taxable income, in case where the tax payable is less, you have to choose that. So that is the basic background of computation. And if you do not know it, filing it for return become difficult, because you have to put the figures while you are filing the return in addition to auto-populated figures. We will discuss in detail. Now coming to this is the background I have given to reach in some of the experience, because this is very much required, and unless you aware about the basic things, you cannot in a position to go for filing the return. So when you are going for filing the return, so we should know first the provisions. So now question is, already I told you, I am a taxpayer, or the assessee is a taxpayer who is required to calculate a very simple way. We can say calculate it's the total receipt of incomes from different sources, as I have explained to you. And after that, take your deduction exemption what permissible, either in the old tax or in the new tax. Then you are required to file the return of income. So who can file? Now, filing of return of income is provided in the section 139, and 139(1) provides the person, a set of rules has been provided in addition to the provisions in the Act. And 139(1) or filing of return, it is known as filing of original return. We can say original means the first time return you are filing. First time is every year you are required to file the return. So the later 2025-26 previous year, that means 24-25 financial year, and you are required to file the return of income. And in that case, while you are going for filing, you should know that there is a different sections under which return can be filed. But we are going to file, since for the first time for this year, that 139(1). Actually, subsequently we will discuss what are the other sections return can be filed. So when my 2025-26 return just I started to file, I will say it is covered under 139(1). So it applies to companies, individuals, farms, other entities. Already I told you, entities meaning means individual, HUF, cooperative society, trust, partnership firm, association persons, limited liability partnership firm, body of individuals, companies, and association persons, local bodies, political parties. Again, categories we can made universities, institutions, hospitals, and venture capital funds. Like this, different category of RCCs are there, and that's why these they are required to file. And this section, this return filing not only provides you who will file, a set of provisions are there along with the rules. And for your kind information that this year means 2025-26 assessment year, which return will be filed, that will report the income of the 2024-25. Usually, this year return forms has been notified very late. Actually, what happens, we have seen immediately in the month of April, every return form has been modified. But this year it took more time. But we understand government wanted to modify the return formats and to capture more data. Actually, you might have seen compared to the last 15 years, number of improvement has been made, and a reporting of incomes and different informations, submission of documents has been enlarged. That's why government is getting a substantial revenue at present. So that's why this year, what we understand, government made drastically changes in the return formats, and accordingly the portal also updated. Actually, by this time, individual due date is approaching, but that's why since the government has come out with the late filing of the return, as a late notification of the return formats, that's why the date has been extended to 31st July date, which was there, extended to 15 September. Due date we will discuss separately. So the mandatory filing of return is, we can say the mandatory return is for the companies and firms, irrespective of their income, whether a company is having income or not having income, or a partnership firm is having the income or not having the income. When I am talking about income, there is also a loss. A negative income is known as a loss. So it is generally happens in case of other than salary income. Salary income, there is no loss, but there is maybe a house property income or a house property loss. There may be a business income or a business loss. There may be capital gain or capital loss. there may be other income, other losses, but other losses not in the all cases. Lottery, there is no loss, but horse race, card games, horse races, there is a loss. So interest income, other than interest which are covered, interest income, there may be a loss sometimes when you are borrowing money and investing, getting the interest. So, but salary income, there is no loss. So whether a company is having a profit or loss, or farm is having profit or loss, but they must required to mandatorily file the return of income, including the return of loss. But in case of individual and other entities, so if their income exceeding the tax-free limit, you know that there is a tax-free limit has been provided in the Income Tax Act in the old regime. 2.5 lakhs and for the senior citizen 3 lakhs is the minimum, and in case of new tax regime the same, but the tax rates are different. There is a tax rebate also there, but they are required to file the return of income is exceeding certain limit. And particularly I am talking, when I am talking other entities, we can say that is your local authorities, political parties, hospitals, recognized other hospitals, institutions, or universities, etc. We can say non-profit organization, NPO, non-profit organization. So in that case, their income are exempted, but even if exempted, they are required to file the return. So when we are talking about the return, means a reporting of income is made in the return, so that government will take up it to verify whatever income you reported, correctly reported or not, whatever deduction you have taken, whether correctly taken or not, any exemption you have taken, whether you are eligible or supported by the documents that required under the act, both cases, in case of reduction, exemption, the supporting documents are required. Let us take one example. There is a provision of physical handicapped person, dependent physical handicapped person under 80D. This is applicable in old regime. So on a medical certificate basis, if the assessee having any dependent physically handicapped person, then they can claim the deduction. So 80D provides that. So the document requirement is a medical certificate should be given by the medical board. So now while you are filing the return, all the details you have to give, and if required also documents can be submitted subsequently. So that's why when after they are required to file the return of. So these are the mandatory cases of filing the return of income. And in addition to that, the category of person what I explained in the previous slide, but there is government also wanted to have more reporting, and whether you pay tax or not pay tax, but you are also required to report. I'm giving there is a seventh provision to section 139 subsection 1. A person other than farm and company, means other than farm company, who is not required to furnish the return as per the aforesaid provision. Those are not at all required. I don't have any income, so I am not required to file any return of income. But the following items which is there at A, B, C, D, in that case, we are required to, the person is required to file the return. So what are the items has been specified? You don't have any income, so there is no requirement of filing return, but you have deposited an aggregate amount exceeding 1 crore in one or more current accounts maintained with a banking company or a cooperative banks. So last year you don't have any income. I'm talking about one example. Agricultural land, if you are selling, which is situated in the other than urban area, that is not taxable. So if it's not taxable, then let one person is having the land, is sold more than 1 crore, consideration received, deposited in the bank account. So now question is, he is not required to file the return because he is not having taxable income. That agricultural income, agricultural land sale is not taxable income. Is not a income at all for the taxation purpose. But even since the amount to deposit is exceeding 1 crore, so he is also required to, or they are also required to file the return. Similarly, if anybody traveling to a foreign, either the assessee himself travel to a foreign, or his father, forefathers travel to the foreign, so they are also required to file the return of income. And similarly, if you are making the paying the electricity bill against the consumption of electricity, in that case also you are required to file the return of income. So 1 lakh electricity consumption bill, 1 crore deposit in the bank account, and 2 lakhs minimum you spend for your travel or provided money to somebody for travel, then you are also required to file the return even if you don't have the income. And any other case as may be prescribed. So whatever prescription, the other item prescribed, that has been prescribed in the rule 12A of the AB of the income tax rule 2. So which cases they are required? Now when your sales turnover, gross receipt, as the case may be, in the business exceed 60 lakhs during the previous year, and if he is, you see what happens, we are talking other than company and farm. So an individual having turnover exceeding 60 crores, but is having business loss, he do not want to file it, not required. Because if he will not file it, he will suffer. He cannot carry forward the losses to set up in the next year, to adjust in the next year. But under this provision, they are required to file the return. Government will check up actually his turnover is more than 60 lakhs, but how the profit is not there or the loss is there. If the loss is there, whether he has taken the expenses correctly or not. So these things they can verify. Subsequently, government can see it. So total in case of profession, it is 10 lakhs. In case of sale of goods, etc., gross receipt is 60 lakhs. So in that case, they are required to file the return. If he is having TDS deduction, you remember certain incomes. One chapter is there for your discussion. If the person concerned, there are certain items of receipts, who is making the payment, and before making the payment, will you deduct the tax at source? I have a house. I let out it for 50,000. It is exceeding the threshold limit. So 50,000 to 12 6 lakhs. So the payer means the tenant while making the payment. I have given to a company. So the company will deduct the tax at source and balance amount will pay to me. So that's a in case of a contractor, there is a 2% or 1%. In case of a consultancy, there is a 2%, 5%, or 5%, and I think 2%. Just check up. We'll check up in the TDS chapter, and 10% in cases also. So that's it is required to deduct the certain items. So if he, let a very simple way I will tell, I have a certain fixed deposit in the bank. I am getting interest. So while paying the interest, the bank deducted tax at source. So in that case, if the tax is deducted 25,000 in case of other than senior citizen, or senior citizen in case 50,000, even if tax is not liable to pay the tax because not required to file the return, but I have to file the return of income. Okay. I am giving one example. I am covered under new tax regime. So in the new tax regime, there is a tax rebate provision is there up to 7 lakhs. This year it is up to 12 lakhs. This year means 25-26 financial year, which I am will report in the next year. But for 24-25 up to 7 lakhs, if there is a taxable income, tax payable, but there is a tax rebate, so nil tax has to be paid. But here question is, let a bank has deducted tax wrongly at a higher side, let 25,000 tax has been deducted. I have 3 lakhs of income. So 10% deducted, 30,000 deducted. So 3 lakhs is not covered under taxable income because I am senior citizen. Let you take it. So in that case, what will happen? 25,000. I am not a senior citizen, but 3 lakhs is there. But it is, let you take, it is not taxable as per the provisions, but tax has been deducted. So that's why the person is required to file if the TDS deduction is more than 25,000. Actually, why they kept it? In case of other than senior citizen, the taxable income exceeding 2.5 lakhs is taxable. And even if you are claiming exemption, subsequently not taxable, but return filing is mandatory before the taking any exemption deduction as a general deduction. So in this particular case, let 2.5 lakhs interest has been paid by the bank, 10% deducted. Let I have not given the declaration form for non-deduction, not given. So 20,000 has been deducted, but I am not required to file the return. So in this case, 25,000 deducted, not required to file. But if 25,001, then return is required to be filed. So government to have a check balance. So this criteria they kept. TDS, TCS case. Similarly, if the any deposit made in the savings bank account and in aggregate it is exceeding 50 lakhs or more during the previous year, in that case they are also required to file the return even if they do not have the taxable income. So that has to be prescribed. So now question will come, what type of return forms are available? As per your syllabus, the ITR 1, how to file ITR 1 will be only discussed, but you can also see what are types of forms are there. So return form, first is the ITR form. ITR form is known as SOZ form. The reason is it is very limited pages, 3-4 pages, 4 pages to my understanding. And previously it was a very less. Now day by day it is increasing. So SOZ is applicable to ordinary resident person, not non-resident person, resident person, and it is limited to only salary income or pension income, income from one house, or income from other sources. And if he is not, other sources also includes lottery income, but in lottery income case, ITR 1 is not required to be filed. Income from horse races and lottery cases, there is a ITR 2 has to be filed in case of individual. And then individual who is a director of a company and also held equity shares, in that case they are also not required to file the ITR 1. And ITR 1 shall not be filed by individual. So when there is a deduction of tax under section 194N, you might have seen there is one provision. It is not income, but the government wanted to have the check on the person, those who are depositing cash. So any person deposited cash in the bank exceeding certain limit, the 1% of the TDS will be deducted by the bank. And you can file the return, claim it as refund, but that's a mandatory requirement. So in that case, ITR 1 is not applied. So ITR 1 in nutshell, I will tell a very simple form. So which is applicable. I am an individual. I have a salary income, I have pension income, I have one house. And 2 house cases, it is not applicable. And I have income from other sources, means interest income, other income, but not lottery income, not income from horse races. So in that case, ITR 1 I have to file. ITR 2 is applicable to individual HUF, Hindu undivided family. Just I wanted to explain you regarding the Hindu undivided family. Actually, I am an individual. So I will file my return on my capacity as an individual. Whatever I have the income, I have house property income, I have business professional income. Let you take, I have income from other sources. So I may have the capital gain. All the 4 cases, because I retired, so I don't have any salary income. So these 4 cases, I don't have any pension also. So in these 4 cases, I can file the return form by choosing item 1, 2, 3, whatever. With business income means 3 I have to file. But the issue here is I have some ancestral property. Ancestral means the property belongs to my father, forefather. That we are two brothers. So now question will come. The ancestral property has not been divided between two brothers. So ancestral property, I have 10 houses. It is my father's property, a father's house. It is ancestral property. But my brother is also a salary employee. So he is filing return as individual capacity as a salary. I am filing return as I told you. But the ancestral income, if the property is not divided, not co-sharing, you can say it is a Hindu undivided family. And this Hindu undivided family can be treated as a separate person and can file the return. So in that case, they have to use the ITR 2. And if there is a business profession, then you will go to the ITR 3. We will discuss in detail regarding ITR. Choosing of ITR form is very important. Wrong choosing of ITR form may your filing of your return become invalid. ITR 3 is RCC is an individual HUFA, Hindu undivided family, who is having income from business or profession. They are required to file the return of income. In addition to income from house property, income from other sources, they can file. But business income means they will go for the ITR 3. ITR 4 is the Sugama. The name of the form is Sugama. The reason is the individual HUF partnership firm who has opted for presumptive tax. Friends, one point, because when I'm talking about return, you should have a master idea about the entire process of income tax exist. From Google also you can find out by chapter wise small write-ups. You can also go for easy understanding. So many incomes are there which a flat rate of tax is computed. Suppose I'm talking about business assessee. I am a business assessee. Let us take I am a professional assessee. So in case of professional assessee, let us take if I am not adopting or going for presumptive tax, what I have to do? My income is the professional income. Let as a advocate, I am getting fee. It is my income. I have certain expenses. I have employee expenses. I have traveling expenses. I have books, library, vehicles, maintenance of office, building, rent, etc. So I'm taking deduction and balance I'm showing it is my loss or profit from profession. So I'm going for filing of return. But instead of that, under 3 sections, first section is 44 AD, which is related to the small business, civil contractor, grocery shop, a small business categorized. So they can pay tax at a certain percentage. 44 AD is applicable to professionals. Let you take my case, I can tell. If I am adopting it, what will happen? 50% of my receipt is taxable income. So if my receipt is 50 lakhs, 25 is my taxable income, then I have to take this amount as taxable income, pay the tax at slab rates. 44A is related to the plowing of goods carriage, mean trucks. So you should not have a 10 truck, more than 10 trucks. Then there is a percentage of a certain amount will be taken as income, and that income is taxable. So these are the presumptive taxes. So in presumptive taxes, ITR 4 is filed. And ITR 4 is a very comparatively number of pages are less than your ITR 3. And ITR 5 is used by the LLP, association person, body of individuals, and a cooperative society, local authority. Local authority will discuss the trust society. There is a separate slide. We will discuss what are the sections covered: 139, 4A, 4B, 4C, 4D. These are usually the trust, political parties, institutions, colleges, hospitals. So these they can use the ITR 5. ITR 6 is applicable to company other than company claiming exemption under section 11. Section 11 company generally they are known as a charitable or religious trust, so they can go for 5 ITR 5. ITR 7 is applicable to companies and who are required to file the return. Previously, I was showing you 5 is not applicable to the persons. The same is applicable to 7. So that means the political party, trust and institutions, colleges, university, hospitals, etc. And once you file the return, a acknowledgement will come showing one-page acknowledgement that your return has been accepted or you filed it. And there is a gross income, there is a taxable income, there is a tax payable, interest payable, and a late fee payable, total tax payable, total tax paid, balance is your refundable or payable. Generally, it shows the refundable because if it is payable, you cannot go for filing the return. So this is known as ITR V. And these are the cases are there. And briefly, because already I told you, this ITR choosing is very important. When I am talking about tomorrow, let you take a, you become self engage yourself for the purpose of providing services. Many of the students, particularly I'm talking, even if they have not completed the CMA or the CA or the CSA, they are also engaged in the filing the return also. Have some knowledge working in the or in the articleship stage or in the case of a training stage, they are doing it, but they should be very much aware about the applicability of provisions. Once you wrongly file the return, your return will be treated as if you have not filed. So that's why very quickly I'm going to, you see the 3 category, it is there. So 3 is income from salary pension, income from house property, one house, and there is no loss from house property. If you loss from house property, then it cannot be go for ITR 1. Then other sources other than winning from lottery and horse races. Similarly, these are persons not eligible, non-resident, not ordinary resident, who is a director of company, whose income exceeds 50 lakhs. You see, I have only salary income, but my income exceeding 50 lakhs. I will not file. I will go for ITR 2. So who has income from more than one house property will go for ITR 2. Who has held unlisted equity shares will go for ITR 2. Who claims a deduction under the 80 QQB or the 80 RRB, that is related to royalty or the patents, royalty from patents or books. Similarly, those who are claiming deduction under Section 10A, Chapter C, that means general deduction is there, and who has a brought forward loss. So in that case, ITR 1 is not applicable. Again, who want to claim relief under 1991? Friends, actually, as I have been intimated that you all are in the college stage, but the requirement of filing to understand require also certain knowledge. And unless I explain you, you may not in a position to apply ITR 1. Since we are discussing and we will go for filing practically ITR 1, you should also know. Actually, what happens, the income from other sources, you can go for filing ITR 1. But in the computation of income from other sources, Section 56 list out which items are treated as income from other sources, such as your interest income, your dividend income, your lottery income, your cross-border puzzles, your renting of plant and machinery and furnitures, combinedly you are renting. So in that amount, so these are the items generally as income from other sources. But while you are computing income from other sources, there is a deduction of under Section 57. As already I told you, all the sections, there is a income, there is also deduction in addition to exemption. So similarly, my 56 under Section 56, the interest income, dividend income, income from agriculture income exceeding outside India, lottery income, like these incomes are there, where I have to take deduction Section 57. Lottery income, no deduction, but all of the cases deduction can be permissible. So if that is so, then ITR 1 is not required, but to be filed, we have to go for ITR 2. Similarly, those are claiming deduction under 1991. Friends, we should also know it. What is 1991? India is having a double taxation avoidance agreement with many countries, around 150 countries. So take the example, India is having a double taxation avoidance agreement. In short, we call it a DTAA with that USA. So what is meaning of that? The meaning is, as per the double taxation avoidance agreement, certain income is the royalty income, interest income, dividend income, capital gain, this category of income. So it will be taxed in the source country. Source means, suppose an American citizen working in India, invested in India, getting dividend, they to take, or the invested money getting interest. So source question is, source country is India. So while the Indian payers, so since the payment will be made from India and the person is in USA, so income accrued in India, arise in India, tax payable also in India. So that's why the deduction will be made. The person is required to make the payment of tax in India. Similarly, I am a resident in India, but I have certain consultancy assignment to a company in the USA. So I provided, and while the US company is making the payment, they will deduct the tax at source from the as per their country provisions. So now question is, already I told you in the beginning, I am a resident. So my income in India is taxable in India. My income outside India is taxable in India. But in this case, the income outside India already suffered tax, means the US government already deducted tax. Then what will happen? Now, for that reason, if it will be again paid in India, it is double taxation. So what will happen? There is a provision under section 90 and 91, double taxation avoidance agreement or unilateral agreement, both cases. The country where the agreement is not there, both cases. Since I paid the taxes outside India, and that income again I included in my total income in India, and computing the tax payable on total income, means Indian income and outside Indian income both. So in that case, whatever tax payable, it will be reduced by the tax which has been paid in USA, but the computation method is different. Thereby, entire tax I may not get the deduction. So later I can give an example. In a general, I have 10 lakhs income in India. I have 5 lakhs income outside India. So in 5 lakhs income, later 15,000 has been deducted outside India, means USA government. So what will happen? While I am computing my tax, 10 lakhs in India plus 5 lakhs in outside India, total is 15 lakhs. From 15 lakhs, I will compute my tax as per the Indian Income Tax Act provisions. Let you take my tax payable is 2 lakhs. Let you take taking all deduction, exemption, etc. 2 lakhs. So what will happen? These 2 lakhs, from 2 lakhs, 50,000 already I paid outside India. So this 50,000 I will get deduction. But actually there is a computation is there as per double taxation avoidance agreement provision. It may not be 50,000, it may be 40,000. Let you take it. So balance amount I will pay the tax. Very simple, without going touching to the provision. Since you all are in the first stage of reading, so you understand. That's why if that is so, I have to go for filing the return, not in the ITR 1. I have to go for filing the return ITR 2. Who wants to claim credit tax deducted source? Credit means there is a minimum alternate tax credit. It's simple. This must have remember. And I have credit I'm going for. So ITR 1 is not applicable. Who are the signing authority in any account? You just see there is the persons who is not having an income, but he is signing, he is a bank signatory or he is a signing authority of a foreign bank. So I am in India, but there is a bank account in foreign where I am signing, I am authorized signatory. So in that case, I have to go for filing not ITR 1, maybe 2. Similarly, if I have any financial interest in equity share outside the country, then I am required not to file ITR 1. And income from business profession, capital gain, other sources which is taxable at a special rate. Actual lottery income is taxable at a special rate. So that's why always it is 30%, no deduction. Dividend income exceeding 10 lakhs. And unexplained income. Unexplained income means the income which you have not explained. That is section 68, 69, 69A, B, C, like these 3-4 sections are there where the income is exceeding, the income you have not disclosed, but it has come to the knowledge of the department. That's why government taxed it at 60% under the 115 PPE. So in that case, ITR 1 is not applicable. ITR 2 or the other ITR 3 is applicable. Income from any source outside India. If any income outside India, then 1 is not applicable. This is applicable. And friends, just I wanted to tell you for your kind information, while we are going for filing the return, I have skipped one slide. I am going back, just you can see. You should be very careful. The reason is this slide actually omitted. And which I was taking unexplained income. These are the unexplained income. Cash credit in my bank account, amount borrowed or repaid in hundi, unexplained expenditure. And unexplained means, suppose you might have seen in the newspaper, many of the persons, those who are having the after marriage, let to take made a huge expenditure. So immediately the income tax notice has come, because they will verify that you do not have any income or less income. How you spend that much of money? That is known as unexplained. You have to explain the detailed expenditure. Investment not fully disclosed. You made fixed deposit, but you are not disclosing interest, you are not showing. Unexplained money. Generally, it happens in case of such seizure. Some money is found in the room. Let you take many cases. 50 lakhs you kept in the room, or cash is available, but you have not explained it where it is coming. And unexplained investments. So all these cases we called undisclosed income. And undisclosed income, once it is come to the knowledge of the department, it is taxed at a very high rate. 60% is the rate of tax, plus 25% is the your surcharge, and 4% your health and education cess. So it is coming around 78 to 79%. 60% plus 25% of 60% plus 4% of the total amount. Total means surcharge and tax. So in that case, it is coming very huge amount. So that's why misreporting and underreporting also carries very important. While you are filing a return, if any income you have misreported and any income you are underreported, so either it is 50% or 100% tax has to be paid by you. So that's why I have shown those who are having unexplained income, they are also not required to file the ITR 1, because for them the ITR 1 is not applicable. And in addition to that, in case of ESOP and in case of cash withdrawal cases, I have already shown you, they are also not required to file the ITR 1. They can go for ITR 2. And ITR 2 already I told. ITR 2 only restriction is business profession income. If you have, I am an individual or HUF, I have all income, salary income, household income, capital gain, I can file ITR 2. But if I have business income, then I have to go to the ITR 3. And similarly, Hindu undivided family only file the ITR 3. Those who are having business income, professional income. And in addition to that, they can also report salary income. They can also report the capital gain. They can report the household income. They can report the other sources. There's no restriction in the form contains that. And generally, what happens, but it cannot be used by an individual HUF. If an individual HUF not having income from business profession, already I told you. Then Sugam form, already I told, business income computed as per provisions 44 AD or 44 ADE. 44 already I told, 44 AD is the small business houses, civil contractors, or the grocery shop or any shop like this. 44 is for the goods carriage, 44 ADA for the professionals. In addition to, you have salary income, pension income, income from one house, excluding cases where loss is brought forward, income from other sources, excluding winning from lottery. Then you can go for filing 4. Otherwise, if you have lottery income, you have more than one house, then you can go for the ITR 3. So this is there. ITR 4 cannot be filed also. There is further restrictions also there like ITR 1. So already I explained to you, simple I am reading. ITR 4 is cannot be used if you are a non-resident, not ordinary resident. If you are a director of a company, if your total income exceeds 50 lakhs, then SUGAM is not applicable. Who has income from more than one house property, who has held unlisted equity shares at any time during the previous year. Unlisted means the share which is not listed. Deduction under Q80 QQB 80 RRB, that is royalty from patent or books, who can claim deduction under section 10AA after 6 years. So all the income, who is claiming expenses while computing income from other sources under section 56, deduction claiming under section 57. Tax relief under 1991, just explained. Double taxation avoidance agreement case, any tax paid outside India, etc. Income tax credit, those who are availed, those who are holding asset, financial asset outside India, who is a bank signatory outside India. So these cases, they are not required to file ITR 4. And ITR 4 not applicable, income from business profession. Actually, these are the already we discussed, will not go forward. ITR 5 already I told, LLP, association person, body of individuals, artificial judicial person, and that case it will be there. And these already discussed. I am not going to report because the no more exclusions are there. What I explained to you, that will continue. Friends, this slide I will not discuss because already I discussed. For your understanding, when the PPT will be shared, you can read it also. A comparison I made, and if you have a salary income, which one you will utilize? If you have a house property income, which one you will utilize? If you have business income, which one you will utilize? Actually, you just see very simple way I will tell. I have salary income, I have a house property income, I have business income. I cannot utilize one. I cannot utilize 2 also. I can utilize only 3. You see 3 cases, all cases it is ticked. I cannot also utilize 4 also. If you house property income, you can utilize any income, but other cases you cannot utilize. Similarly, you see capital gain case, ITR 3 can be used. So even in capital gain case, all the income, I have 4 incomes, then I will go for ITR 3. So I made a comparison actually. Capital gain, different types of capital gains are there. Share securities, long-term capital gain, short-term capital gain, again capital gain from immovable property, because the tax rates are different. So that's why it is there. Again, I'm telling, when you are related, you do not also bother about the tax rates, because automatically, once when you are going for filing the return, it is calculated automatically. So there is no requirement of going for the person. This is a comparison given, which you can see ITR 3 for an individual HUF is very perfect, but all the incomes has been covered there. So these incomes I categorized for your better understanding, and you can go through it separately. Whatever I discussed, I made a comparative. ITR 1, 2, 3, 4 because of individual HUF, etc. Then 5, 6, 7 separately it has been compared. These are the cases just to go through. I am not discussing this one. Similarly, ITR 1, 2, 3, 4 cases other than signing authority cases that has been given. Similarly, other assessee case I have given ITR 4, 5, 6, 7. So this has been given, who can file, and made a comparison. Just to see, 5 is used by the LLP, association person, body of individual, local authority, judicial person, and similarly business trust, investment fund or investment trust, and but 4 will be only utilized for presumptive tax. ITR 6 is utilized for company other than company claiming exemption. ITR 6. ITR 7 is for the political parties, trust, etc. This is the ITR 7. So this is the comparison you can go through. So now question is, once I selected the ITR form, then the next question is coming, the source for obtaining the return form, where I have to get the return form. Subsequently, we will discuss the procedure. If we are talking about, we can also physical mode of filing only in case of a super senior citizen and whose income is not exceeding 5 lakhs. And all other cases, the return is required to be filed online. So that's why I have to get the income tax form from incometaxindia.gov.in. But while I am going for filing the return online, that is known as e-filing of return, in that case, I have to go to and log on Income Tax India e-filing.gov.in. Actually, you must be registered PAN holder. You should have a permanent account number. You registered with the income tax department. The next class, day after tomorrow, we will discuss how to register and other cases also. Madam. Hello.
पीपीटी वगैरह बनाया है क्या?
Yes, the PPT is presenting, na? That's why you should have told beginning. You told na it is showing.
No, sir, the screen is visible, but the PPT is not.
But you told me that it is shown. But you have already told. Later I am disconnecting. Then I will go forward.
It's okay, sir.
But in the beginning, I told, is it visible? You told,
Yes, sir, your
visible.
screen is visible, but I thought you have said your screen. It's okay.
No. That's why I asked you, na.
It's
Whether
okay,
it is
sir.
showing or not. But
It's
that
okay,
is
sir.
very much. But actually, that is very much required, because without PPT, this subject, particularly the students, is not convenient. That is
Yes,
a
sir.
very good PPT was there.
Yes, sir, you
Just,
have to share your screen, not a particular slide. Then only
no
students
slide.
can view.
No slide is there. That is actually slide has been shared. Anyhow, it is
Not slide, like you have shared just one folder only. Either you have to share your screen.
no. Just you see. Hello.
Yes, sir. Now it's PPT.
But the entire PPT, I think we have covered 34 PPT, not 34, it is maybe 29. So all
It's
the
okay, sir.
29 PPT I have shown I thought you should have
It's
told
okay,
me.
no issue, sir. Just send me the PPT. I will share it to the
Yes,
students. Okay?
you share the student, because it's very much required.
Okay, fine,
Okay,
sir. No
okay.
issue. They can
Actually,
watch the recorded classes also. There's no issue.
So what you will do next time, somebody can be told me when PPT is not available, because every time we use the PPT, and PPT
Yes,
is
sir.
more helpful to the students. Okay, ठीक है, but just now once again you tell the PPT is okay.
Yes, sir. It's fine.
Okay. Friends, actually because of certain disturbance, communication gap, I will tell the around 25, 6 slides PPT what I have shown may not be shown to you, but this PPT will be shared to you. You can go through the PPT having lot of good informations, particularly the comparative statement which I have given. So already one thing we can remember, if the first point, as already I communicated to you, that ITR form, the income tax return form, is available in the income tax portal, that is incometaxindia.gov.in. And you should have a PAN holder. That means you should have a permanent account number. Maybe next class we will discuss what is permanent account number. On the basis of permanent account number, we will also discuss should be linked to the Aadhaar number. And in addition to that, it is also very much required that you must be a registered person in the e-portal. And the income tax e-portal is you have to log on to the e-portal www.incometaxindia e-filing.gov.in. This is the e-portal, same portal, but is the extension to the incometaxindia.gov.in. And in this procedure, once you registered, then you can go for the filing the return of income. As already I told you, unfortunately the slides could not be shown, seen, you could not see it, But you will also see from the physical when it will be communicated to you, the PPT, and there the selection of ITR form is very important. And once you selected, so you can download it. Actually, you have two options there. And generally what happens, there is also our course curriculum covers also the e-portals, contents of the e-portals or the facilities of e-portals. Will in the due course we will discuss. But again, I'm telling the e-filing utility or softwares that is available, business application softwares. It has been uploaded. It is in the department site where we can download the form. So two ways of filing, as already I told you, physical filing. Physical filing is a very limited purpose. It is to be filed only for the senior citizens, super senior citizens, and not exceeding certain amount of limit. To my understanding, is 5 lakhs. But the question here is all the return has to be filed through the e-filing system. So when I am talking about the income tax portal contains instructions how to fill up the return of income, in addition to how to pay the tax before filing the return. A lot of information are there. A perfect system of e-filing portal is available with different extensions. So that's why we can divide the furnishing of returns into different forms. One is a paper form, already I told you, that is known as physical form. Electronically you can file. When I am talking about electronically filing, I again I am dividing it into two ways. One is online itself you can file. Online means there is no requirement of download the form, ITR form, keep in the your desktop or laptop, fill up it, then you upload it. There is no requirement. Online you can file, but online filing is not available in a case of companies, partnership form, etc. It is mostly available in the ITR 1, 2, 3 and 4. And once you will file online, automatically the informations, data, third party data is captured or auto populated in the your return. That to take that is known as when you are going to file the return, practically you will see, but when you are going to file the return, it will ask you whether you will go for online or sorry, auto populated data, or you will go for without auto populated. But if you go for without auto populated, then what will happen? Then you have to fill up everything, your basic data, name, address, etc. Start everything you have to fill up. But if I put the auto populated data will be automatically reflected. So in that case, many cases there is no requirement of filing. First, your basic information is not required. Second, I have interest income, I have a dividend income, you have salary income. Whatever TDS deduction is there, automatically it will be reflected. So once it is TDS is means it is automatically TDS statement. It is also auto populated. Let I have 100 cases TDS deducted. Manually putting is very difficult, but auto population means everything will put there, only you verify. So better to adopt the auto populated wherever facilities are available. As I told you, either 1, 2, 3, 4 facilities are available, but 5, 6, 7 I think it's not available. And otherwise you can also download the JSON file, keep it in the folder and fill up it. Then subsequently you can go for upload. And while you are uploading, there is a verification requirement. We will discuss in detail, but simply remember, verification can be done by using electronic verification code, or you can go for the digital signature. Generally nowadays, EVC, electronic verification code, is used. Once you filled up the entire form, uploading it, conferring for the uploading, then one EVC code will come at that is linked to your Aadhaar number, Aadhaar mobile number. So that is very easiest mode instead of going for the electronic verification or the USB. USB is applicable only in case of companies where the tax audit is there. In that case, EBC I think is not used. And but in case of GST portal, if you go on, all the return etc. is EBC, digital signatory or electronic verification, sorry, digital signature drive is not required. So that once you filed, then ITR form V will come out. This V is known as acknowledgement, and this acknowledgement you can e-verify. Now the e-verification facility is available. Otherwise, you are required to submit it within 30 days. Friends, in this slide it is 120 days written, that old provision, I replace it. So it is 30 days. So once I file the return of income by the means what I told, either in the paper form, and in the paper form what will happen, the acknowledgement V will be sent in the paper form to the CPC Bangalore, and within 30 days. But other than paper form, means electronic form, in that case you have two options. You can download ITR-V and within 30 days you send to the CPC, or instead of downloading, you can also verify it through the electronic mode. So either you go to your bank account, accordingly you verify, or you can go to the income tax portal, you can verify, and that is the easiest mode. Once you verified, the acknowledgement number will come out, and there is no requirement of a physical submission. And so that is the general procedure followed, and this procedure practically will be discussed, and in the portal how it is filed will also discuss. Madam, it can you confirm? I think now all the PPT are visible. There is no issue at all. Hello, Annapurna madam. Hello, madam. Madam, it is visible. Just I want to check once again, because I have covered so much of slides, but it was not visible. Madam, now slides PPT are visible. Okay. Actually, what happens next class or this class onwards and next class, at least whenever it is not visible, I used to always I use the PPT, because PPTs have a more clarity for the students. Okay. And if not visible, actually tell me, so that I can feed upload करेंगे. हाँ हाँ okay okay okay. Then I will share the PPT today. Whatever covered, I will share the PPT. Okay. Thank you. Friends, next point is, once you prepared your ITR, then that has to be the manner of furnishing. Again, I am categorizing. So suppose I am individual HUF, how I will file it. If I have income exceeding certain limit, then I am subject to the tax audit. Particularly, I am talking in case of business associate or associate, those are doing the profession. The income is computed under business profession income. So in that case, their accounts are subject to the tax audit under 44AB. In that case, they are required to file the return electronically, and electronically under the digital signature or the electronic verification code. And the ITR-V is also to be made in the form of electricity verification form. You can also do it. But if it is a super citizen, senior citizen, 80 years and above, so in that case, who furnishes return either in the ITR 1 or 2 or ITR 4, so in that case, the same principle is also applicable. But only, again, I'm telling, paper form is 5 lakhs not exceeding, they can submit in the paper form. Again, that is not a business income, having only salary income, so that is very limited. Again, I'm telling, very few people are submitting the return physical form, hardly very few. And whatever return form physically submitted, it is also electronically transmitted by the department. So that means whatever return I submitted, either electronically or physically, when physically subsequently it was uploaded by the department, So 100% cases are electronically processed by the CPC, Central Processing Center, and the either once it is processed, either you have to get your refund if excess tax paid, or if wrongly claimed and tax payable come out because of processing, then you have to pay the taxation. So individual, already I told how to verify the return, how to file the return and verify the return. Other cases, it is electronically under digital signature, same ABC code, and ITR V, either you have to submit electronically or you can submit it physically. Generally, electronically is very easy to submit instead of sending it physically. And there is some, again I am telling, physically submission, again there is some, it must be in a A4 size paper, it must be in a speed post, not in a courier. That restrictions are also there. And it should be in the blank ink, it has to be signed in the blank ink. So these are the restrictions are there. And any person who is required to company is always electronically, and the electronically signature should be there. And again already I clarified you, EBC code is not used in the company case. ITR 6 case it is not applicable. ITR 7 case, if it is a political party, then or any other case who may be filing ITR 7, and that case electronically EBC, and again I am telling ITR V also to be sent electronically, and that has been submitted. And a farm, partnership farm, limited liability partnership farm, and that category same provision. So that is VP, it is covered under 44 AB, means tax audit is applicable. They are also required to file the under the digital signature. Actually, once you filled up the return form, uploading it, then it will ask you for verification. So that verification is, we cannot say it is in the income tax provision, we cannot say it is signature. It is actually verification. And I, Sri Amaka, son of dash, in the capacity of dash, filing the return at this place, like this one last verification is there. So that has to be done electronically or EBC, or after uploading by using this, then you have to transmit the data in the ITR V, and again already I told you ITR V will be physically or electronically. So these are the cases, and already we discussed, actually whatever already I told you, we already discussed. Okay, same thing also in this slide, you can go through it. Mode of filing already I told you. While I'm talking, generally we'll discuss in detail. 26 ASS statement, annual information system. The following details has been provided. In this point, that is tomorrow next class we may also discuss permanent account number, annual information statement. While I am filing return, you just in the previous slide I have explained to you that a return of income has to be filed. When I am going for e-filing, I will always prefer to have auto-populated data. Okay. And when I'm going for auto-populated data, actually this auto-populated data is coming from the 26 ASA and AISA. 26 ASA is a previous format which is continuing at present, but section 258, as I remember, was 58A. It was amended, it was introduced, and by way of one annual information system or statement will come in the portal. So certain payments which was accounted in my account, in the books of accounts, or in the bank account, or somebody paid on which the TDS, TCS has been deducted, or the details of a TDS and 15A, 15G declaration form has been given. 15A, 15G also in your syllabus, where the declaration has been made that no tax to be deducted at source. In case of TCS default, in case of detailed information about 194IA, 194IB, 194M, 194S, this is for seller, landlord or property contractor, professionals, seller of virtual digital assets. Similarly, tax deducted source under, I think it is repeated, details of transactions, demand of payment, provisions to section 194S, buyer, seller, virtual digital assets, refund by the TDS, CPC, Central Processing Center, all other put in that statement. And earlier it was 26 ASA. 26 ASA capture all the details of data. Whatever payment I received, salary payment received, where TDS deducted, interest received, TDS deducted, professional fee received, TDS deducted, and investment in the bank exceeding 10 lakhs, it is also reported, and mutual funds or the security cases where the TDS is deducted. So everything was reported. But in addition to that, AIS also contains lot of information. Friends, for your kind information, even also a bank account where let you take, you got 100 rupees as interest, it is also auto-populated as annual information statement. And once you given option to go for filing your return, e-filing of return, and given in the first instance for auto-populated data, immediately these informations are auto-populated in addition to the basic information which is available in the portal of the Income Tax Department. So that is a very important point which you have to keep in mind for the purpose. And functionality available in the portal. Functionality we will discuss also with certain slides and uploaded video clips also. But these are the generally these functionality I am talking about related to the filing of the return. Related to, there are lot of functionality are there. I can also view my 26 ASA or AIS statement where details of data as I explained to you is available. I can see whatever return already I filed in the past or the present filing, after filing, I can download that also. I can pre-filled JSON file I can available. Auto-populated is coming because of the pre-filled JSON file. So once we are going for filing, pre-filled JSON file will come. JSON more JSON file now used for the downloading. Actually, all the files are in the JSON format. And e-verification return facility is available. EVC, electronic verification code is available. And you can also add any authorized person to file your return. Instead of that, maybe a CMSA or a CS or any advocate, etc. You can also add or register the representative. Filing of return forms are available there. Return defective return, that is also available. Aadhaar linking facilities available. Filing of appeal is available. Registration of upgradation of digital signature proceedings also available. Refund reissue request is available. Many things are there. We will discuss subsequently also. Profile updation is there, validation of bank is there, addition of the bank, deletion of the bank, and many other information. You see, for your education purpose also, lot of information or booklets are also available in addition to video clips are available. That also one can download and have the updated. Again, I'm telling, even if you are not a registered person, but still then also you can see the in the dashboard of the portal, you can see what I am explaining to everything also there available, except which are mostly related auto-populated, let you take a download pre-filled JSON. It is in the e-filing portal. But in the Income Tax India.gov portal, lot of facilities are there, including video clips are there. That also you can download and see. Next point is when I am talking to filing of the return, so the return should be filed by the due date. So what is meaning of due date? Actually, these are the due dates has been provided for filing of the appeal. So one of the case is a return should be filed on or before the due date. Sometimes government may extend the due dates, just like this year for the financial year 2024-25, assessment year 2025-26. government has extended the period, particularly the 31st July, the date has been extended to 15 September. But actual due date is where a person or the assessee, including the partners of the partnership firm, is required to furnish a report in the form 3CEB under section 92E. International transaction, that is transfer pricing provisions are applicable, then the date is 30th November. So 2024-25 previous year incomes, tax payments, etc., all the has to be reported in the ITR form before the 30th November. That is only applicable to the assessee, those are having the international transaction. Where the assessee is a partner of a firm and a firm is required to furnish the return of income related to the firm where the international transaction is applicable, then 13th November. In other words, I will tell the assessee, those who are having the international transaction, and the assessee partner of the firm, those who are having the international transaction, they can file their return of income by 30th November. Where the assessee is a company not having international transaction, then they are required to file the return by 31st October. Any other assessee, where the accounts of the assessee are required to be audited under the provisions of law, then it's 31st October. Where the assessee is a partner in a firm whose books of accounts are audited, that is also 31st October. And any other case, means individual HUF and a not company, other assessee, those who are not subject to the tax audit, then by the 31st July. So this is the due date one has to file. If you are filing your return after the due date, but in that case, but again I'm telling, there is a belated return filing provision is there. By that date you are filing. So in that case, you are required to make the payment of late fee and file. So late fee is applicable if your income is exceeding 5 lakhs, then 1000 rupees. Sorry, not exceeding 5 lakhs, it is 1000. If it is exceeding, it is 5000. So late fee you have to make the payment. And then the question will come, belated return. Let us first discuss, then we will come to the previous one. Suppose you could not file the return within the due date, as I already explained to you. So due date includes the extended date of the government by the government. So in that case, if the assessee fails to file the return within the due date, that is 139(1), or which the time allowed under 142(1). 142(1) is a section where that I think one slide perhaps I omitted. Just 1 minute. Belated return, one slide actually is not there. I incorporated, but again I'm telling, this is actually belated return. So if one has not filed, then the time limit is before 31st December. That is very important point which you have to keep in mind. What happens? I could not file my return. Let you take one example. I am an individual. My due date is 31st July 2025. But because of this year, government already extended the due date, as already I explained to you during my discussion, that is the 15th September 2025. Let by 15th September I could not file my return. Then what will happen? I can file my return by 31st December 2025. That is the December 31st is the date by which the belated return can be filed. So belated return or the revised return both can be filed within that date. So belated return means the return which you could not file within due date, but after due date, but with the permissible date. So 31st December is the permissible date. And second case is, in many cases, you could not file the return, and the notice was issued under section 142(1), allowing you certain time. So the time by which it is allowed, you will file, but the filing is after the due date, but before the time allowed, then in that case, that is also the return which you filed belated return. Belated return is a valid return. Okay, that is not invalid. So now belated return, whatever you filed, and in that case, you also liable to pay interest, liable to pay late fee under 234F. Already I told 1,000 or 5,000. You are also liable to pay interest under 234A. Friends, interest under 234A we'll discuss separately 234A, B, C during the self-assessment tax payment. Okay, before filing the return, you are required to make the self-assessment tax payment. So that slide will start PPT will discuss. What the disadvantages is, if you file the belated return, and that means after the due date of filing return, but permissible date of filing the return, certain benefit is not available. Actually, the deduction which are available, tax holiday benefits actually, which is available under chapter 6A and 1010A, means your income is totally taken as a deduction. Let in case of industrial development, in case of startups, so that is a deduction of 100%, and subsequently certain percentage are there. So you have a taxable income. So sorry, you have a gross income. From gross income, you can take the deduction because you are eligible for the deduction. Let example of startup. So in that case, if you have not filed the return within the due date, if you file the return within belated date, you may not get the benefits. Similarly, you have a business loss, and this loss, certain loss, not only business loss, capital loss, business loss, other than house property loss, other than. So in that case, if you have filed your return after the due date, then you may not carry forward and set up. So what is meaning of a carry forward of loss? Let 2023-24 financial year, we have loss of 10 lakhs. We filed the return within the due date. These 10 lakhs you can carry forward. 2024-25, you have 15 lakhs income. So 10 lakhs loss which you carry forward, you can adjust. So 15 lakhs is the income, 10 lakhs is the adjustment, 5 lakhs is the taxable income you pay. So you got the benefit. But in case of belated return, you may not get the benefit. So that is very important. That's why always you adhere to the due date of filing return. And the return of loss. So when already we discussed, in case of company partnership firm, whether it is a loss or it is a profit, return has to be filed. Return has to be filed. Return has to be filed. Mandatory return has to be filed. But in case of business loss, in case of capital loss, in case of loss from activity of owning, maintaining horse races, that means it is covered under other sources. Loss from business specified under section 35 AD is a specified business. These are certain business has been declared, which are getting the benefits. So in that case, if there is a loss, if you have not filed the return within the due date, this loss you cannot carry forward. But for your information, if you have a business, if you have a house property loss, and you have not filed the return, but you can carry forward and set up. But other than house property loss, other losses is required to be filed. Thereby, once you filed, you have the option to carry forward. Once you opted for carry forward, then you can set up in the next years. So that is to be important point which you have to keep in mind. So belated return and return of other income, other returns. In addition to the return is also required to be filed by the charitable trust. For your information, actually the income from property held by the trust or legal obligations wholly or partly for charitable religious trust, temple trust to take, many trust has been formed. So voluntary contribution on such trust is exempted. And actually the exemption is applicable under section 11 and 12. And whatever exemption is applicable, you are required to file the return of income. Actually, trust income is totally exempted provided certain conditions satisfied. For your knowledge purpose, I am telling that a trust is having a surplus of 100 minus expenditure of 20, 80 is the surplus. So actually 85% of the total amount, there is a lot of amendment has been taken place, and a new tax bill also drastically the section, the trust income computation or trust provision has been amended. But for your kind information, we will not go in that deep. Simply remember, the trust income is exempted under section 11 or 12. Whatever exemption they are taking, even if the taxable income become nil, but still then they are required to file the return of income. The purpose is for getting exemption, certain audit certificates, certain forms required, prescribed forms required to be uploaded in addition to the return formats, and that has to be required to be examined whether the trust is a valid trust registered under the provisions of Income Tax Act, whether the deductions which has been taken legally taken, and evidence or documents are properly based upon books of accounts. So everything is required to be verified. Similarly, political party also required to file the return, and any income of the political party is exempted under section 13A. To get the return under section 13A, actually certain obligations are there. The persons, those who have contributed, made a contribution to the political party, their name to be disclosed in displayed, and everything has to be reported to the not only to the commissioner of election commissioner, but also to the department. So in addition to filing of return, the donations given has to also to be reported, and if it is other than cash, then it is totally exempted. So that's why even if exempted, but the return is required to be filed. Then research association under section 1021, news agency under 1020B. Actually, I have shown you 139(4)(c), the ITR 7. So in that case, you see, I listed everything. So this covers research association. These are the institutions or the organizations totally exempted, but they are required to file the return. So it's better I will have a detailed research association referred to in section 1021, news agency referred to in section 1022B, association and institution referred in 1023A, 1023B, specified employee welfare fund 1023 AAA, university or other educational institutions 1023C, 3D, AD, AB, hospital or other medical institutions 1023C and other related subsections, funds institutions referred in section 10. Mostly, see, 1023 contains a lot of institutions, securitization fund, mutual fund, medical institutions, investor protection fund, settlement guarantee fund, venture capital company, trade union association, body of authorities or board or trust or commission, infrastructure debt fund. So they all are required to file the return of income without giving effect to the provisions of section 10. Section 10 consists of deduction. After deduction, taxable income is 0, but before consideration, you see, if you have income, you have to go for filing the return. And if you not file, there is a penalty provision, 100 rupees per day during the because government has given this benefit to the trusts. And when the government is given, but the benefit should be, the government should be sure that the purpose, the objective for which this benefit is given, it has been properly utilized and they are eligible for getting the deduction. So these are the cases. Return of income for university college, that is also already I told, recognized institute or colleges, they are eligible for getting exemption. Similarly, investment funds under 139(4)(f), so they are required to file the return of income. So with the next slide, we'll stop it, we'll close the session. Only one slide I will discuss, that is the revised return. Any return you filed within the due date, mark the word, or the belated file. Actually, belated filing return was not earlier permissible, now also permissible. Let us first take any return filed within the due date of filing return. This year, the government has extended the due date to 15th September. I filed my return by 15th September 2024 for the financial year 2025. Again I am telling, I am filing my return of income for the financial year 2024-25, that is the assessment of 2025-26, by 15th September 2025. I filed it. But after 15th September 2025, I found that there is a commission, there is a mistake in my filing return. And what happens, I can revise the return, and that revision return can be only revised by 31st December 2025. After that, it cannot be revised only by that date. And remember, as many as return you can revise, but by only 31st December 2025. The last return which is filed is the valid return. Any return which is revised, it become invalid return. That return will not be taken by the department for the assessment or verification. And maximum date by which revised return will be filed by the 31st December of the assessment year. And another point just to see, in case of any return which is a belated return filed under section 139(4), means my due date is 15 September 2025. I am an individual in this particular case. I filed my return the 15th October. I can also revise it, and by 31st December. After 31st December, it cannot be revised. Belated return was not revised earlier. The provision has been amended. Now the facility is given. And revision of a loss return can also be revised. And the return filed in pursuant to 142(1) cannot be revised. 142(1), what is meaning of that? Actually, I could not file my return within the due date. The department always, practically I am talking, once your due date is over, means later in this example, once the 31st July and extended date is 15 September is over. In case of company they to take other than company which is having the foreign currency, international transaction, let 31st October. Once 31st October is over, or in this case once the 15th September is over, the revised date is over, government will send, the department, actually the income tax department will send SMS to you, register mobile, that you file the return. But once the 31st December is over, you will find immediately many cases notices will come under section 142(1). You have not filed your return. So you are requested to file the, so you are bound to file the return. And once you file the return with notice to 142(1), you cannot revise it. So that cannot be revised. Parents, with this, I just concluded it, and this revised slides subsequent to defect return others we will discuss in the next class, including PAN, AIS, income tax portal. Third class we will discuss how to file the income tax return. Fourth class we will discuss the balance. So with this, I think I am closing the session today. And madam, hello.
Yes,
madam, I am closing it. Actually, whatever today I discussed, this slide I am just sending to you, and you can display it, or in the day after tomorrow class I will combine and send it. Whatever the proposal will give, I don't have an issue, because actually
it's up to you, like how you want it to be shared to the student.
better to continue in the once the one PPT, so that day after tomorrow class uska baad, after that I will share the PPT. Okay.
Okay, sir, fine.
Okay. Actually, next class what will you do? Usually what happens? Sometimes you disconnected. Okay. So somebody, if it not display, because I will use throughout the PPT and video clips, etc. In the portal. So if any time you
Okay, sir.
disconnected, just remind me. Okay.
Okay, sir.
Okay. Okay. Thank you
Okay,
very
fine.
much, sir. Thank you,
Okay,
everybody.
thank you, ma'am. Okay, thank you, sir.